Well, hi everyone. Welcome to the Buffett and Beyond Saturday ETF Report. And folks, we got a nice rally going on. And this is January 17th, 2025. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to invest even better than Warren Buffett does now. And when we look at the top stocks in the NASDAQ 100, we have about 12 stocks. And we can see we're just starting the year off pretty good. The QQQs are up 2.1%, S&P is up 2.2%, and our top stocks are up 2.7%. Now, this is for the first 17 days of this month. And I'm recording this in the middle of the 17th, which is Friday. And I just want to show that last year, this portfolio wasn't the exact same portfolio, but it had three different stocks in it, was up 47.2%. The year before, 2023, coming out of that recession, it was up 97.9%. Over 5 years, the stocks that we picked for this NASDAQ 100 portfolio up 422% versus the S&P over 5 years of 82.1%. So we're looking at this portfolio is a really hot portfolio because it's mostly tech stocks, and you could see cybersecurity, semiconductor stocks, and a few other stocks. Advertising is in there, computer peripherals is in there. So it's a pretty nice portfolio, folks. The thing is that, of course, it's riskier than the market itself. So in the down years like 2022, this portfolio went down further than the S&P did. But in the years when the market is neutral or up, this portfolio really moves. And let's take a look at some of the ETFs that are out there, and these are the QQQs. So this is the NASDAQ 100. And what we were worried about last week is we had these declining tops in here, and we had the declining tops here. So now we have this coming down and all of a sudden being broken, and this indicator is the stochastics, and we can see that we have a nice bounce up, and right here we had this line in here while the market went lower. This indicator did not go lower, and that gave us, as we were talking about last week, well, last week we were right in here, so it was close, and we didn't know what to do exactly. But then the first couple of days of this week, it started moving up, and actually it was on Wednesday that the market started moving up. So we can see that down here, we went above the 50-day moving average and above the 20-day moving average. Had us a little worried in here because we went up and closed above the 20-day and the 50-day moving average, and then the following day went down, closed below both of those averages. But it did not break this low in here. So these little kind of indications show us that it looks pretty good, and down here our intermediate term indicator is the one we really want to see cross over. So we're looking for a good week this coming week, and if so, this is a nice buy signal that might last a month or two or three even. So yeah, we're looking forward to this, folks. Let us look at the transportation, because as the transportation goes, so goes the economy, and we've had this buy signal back here for almost call it 2 weeks now. 2 weeks, and we just got to bounce up, and then we had a little worry right in here, but this indicator kept going up, and so did this indicator up here kept going up. So right now this is down. We're talking Friday, we're down, sitting on that 50-day moving average. So we hope the transportation keeps moving, because that's a good indication of how the economy is doing. And let's look at the S&P 500. Beautiful crossover down here. This is nice. This is what we want to see. And you can see we are now up above the 20-day moving average, which is the green line, and the 50-day moving average, which is the blue line. Now, the market hasn't closed yet, but boy, we're up 76 points as I'm recording this. That's a nice move for the S&P 500. And you can see here, this is another point where the market made a lower low, and this indicator did not make a lower low. And now we're shooting up to the top side. It didn't break down. So when you get something like this, that's called a divergence, the lower low in the market, but not a lower low in the indicator. And that's a bullish, in this case, a bullish divergence. And this is very important down here. This intermediate term indicator turning up, the black line turning up over the red line. Nice move. And when we look at the technology, one of our favorite ETFs, we can see the same type of thing, except we just got a little worried in here because this bottom went down further than this bottom, and we're starting a nice climb up. We'll see if this crosses over. We really want to see that. But if the QQQs are going to go up, the technology is going to lead the way. And the semiconductors, same thing. We are right here, down here, just about ready to cross over. And this is very, very nice in here. As we can see, we are above the 50-day and the 20-day moving average. So we're looking at some good indicators here, folks. And let's see if the utilities are doing anything. They came down when the interest rates started going up. Utilities started going down, and then they played around this bottom in here, and you can see we tested on Monday this bottom over here. And we went below it, but we closed above it right about in here, right about the middle. So that gave us a slight indication that this indicator down here was going to turn up, and the next day it did. So we're in a nice ride here in the utilities, and the utilities are going up. Interest rates are coming down just in the past couple of days. So that's a good sign. And the healthcare, oh, the poor healthcare. You can see these declining tops in here, right? So we have to break through at least this 50-day moving average in here to stop this decline in here. And the poor healthcare, we've been writing about it all week because we did have a healthcare stock in one of our portfolios last year, which just didn't do too well. It was one of the best, but it didn't do too well because the whole ETF didn't do well at all. So they're trying to get their act together, and we'll see what happens, folks. Even the healthcare people say something has to be done, and they have to make the whole system a little bit simpler and a lot cheaper. So we'll see what happens in here, but I wouldn't touch something like this. Even though this indicator is pointing up, we have to be a little bit careful in here. It's just not one of those ETFs, or sectors, I should say, that are doing well in the market. There's too many other good ones out there. So, folks, we had a pretty good week. Actually, it was Thursday and Friday. That was good. And we finally went positive in this market for January. So we'll see how the rest of January does over the next couple of weeks. Remember, Monday's a holiday. So you go out, you enjoy it, get your mind off the market, because it'll be back open on Tuesday. And, folks, we'll be right here alongside with you.